All right, welcome back to the Big Skinny with Lou Basenese, and I'm welcoming to the show for the first time Eddie Ghabour, co-founder and CEO of Key Advisors Wealth Management. Good to be on air with you finally, Eddie, even though it's not the air that we usually are crossing paths on. I can't hear you, but I'm hoping that the audio is working. But I'm going to start right off the question. Nvidia, Microsoft, what do you think? I know that you have been very savvy about timing spots to get in and out of tech and other trades. What do you think of Nvidia, Microsoft here? And then we'll go on from there.
From a tactical perspective and our tactical strategy that we actively manage based on some shorter term outlooks, we don't own Microsoft right now. We still own a minimum position in Nvidia. And really the main story behind it is these are great companies. We know that Nvidia's earnings were fantastic, but at the end of the day, we have to respect what the market's telling us. And right now the market is not satisfied with what these companies are doing. And I think it's a matter of the positioning cycle, meaning that they're so overweighted to tech that in order to catch this rotationary trade that continues to accelerate, that's the area that's being liquidated to go into this trade. So for us, we think second to third quarter of this year, there'll be some better opportunities to get into those names and gross up their positions. But right now, we're going with where the momentum and strength is, both technically and fundamentally.
So you don't think it's a fundamental issue per se. You think it's a capital allocation issue. They're just taking profits here to put into more attractive areas.
That's absolutely right. I mean, look at NVIDIA's earnings. You said it. I mean, you couldn't have asked for a better earnings report. And I think that speaks volumes. It happened with Palantir as well, too. Her earnings were just fantastic, but then the market just rejected it. And so it broke through some resistance levels. It's below the 50-day moving average. Today, it broke to 200, but then it bounced back nicely. So I'm going to be real interested to see how NVIDIA reacts. If it rejects tomorrow, then that's going to tell us there's still going to be some time, in my opinion, for that name. But fantastic company. Fundamentally, there's nothing wrong. And that is a best of breed in the semis for sure.
Yeah, before I ask you where you're moving money to ahead, I got a quick question because I've watched you on air, shared the screen with you, usually right after you go on. You have a tremendous knack with changing your tactical allocation. My question related to that is, have you seen the frequency of needing to do that change with more retail investors coming into the market and the volatility that I've gotten? In other words, have you had to be more nimble, and how have you adjusted your strategies to be so?
Absolutely. And that's a great point. I mean, even when you just look at the retail investors, the amount of volume that is contributed by just zero dated options have really changed the game, where volatility is only going to continue to stay high. And I think it's going to be more and more challenging to not be tactical. So one thing that we've done is we respect the technicals now more than ever versus just being purely fundamental, because sometimes fundamentals don't matter in regards to what the stock price is doing. And in today's world, with volatility as high as it is, names can lose 20 to 30% of their value in a matter of a month, which used to take 12 to 18 months. So we're quicker to sell, we're quicker to buy, and we'll do it with more size.
Yeah, I've had to learn to respect the technicals too, because so many other people do. You're forced to. So let's talk about your early move into economically sensitive areas of the market, particularly small caps, working out brilliantly. I mean, if I look at the last, call it 6 months, small caps have been on an absolute tear. The Russell 2000 finally reclaimed the new all-time high. What led you into small caps, and what's your forecast for them as we head into Q2, Q3?
So one of the biggest convictions why we were so had the highest conviction on small caps was the bar was just set so low. Their earnings growth was dismal. They were left for dead. And then when we started to take a look at the economic cycle, with some of the tax cuts coming, some of the things from a policy perspective that we thought was going to give a real jump to GDP, we thought small caps would be the ones to really have the biggest jump and biggest upside. So you're going into 2026 with the bar set really low in regards to earnings growth. And we look at the earnings on the Russell 2000, a lot of these companies they're showing growth of 20% year over year. And that's why I think that rotational trade is going to continue, because we think small caps are going to continue to outperform just like other areas tied to the economy. I don't know. I've been doing this since 98. I don't remember a time where the gap between the NASDAQ and some other areas are as wide as they are when you look at these economically sensitive names. So we're humbled by the fact that it has generated a tremendous amount of alpha. And I think that trend is going to continue throughout 2026. The Mag 7, in our opinion, will not be the leader for the first time in a while. And I think that's still early innings, that most people don't believe in that trade yet. So this is why we expect the rotation to accelerate in the second quarter.
Man, I completely agree with you. I was banging the table last year and I said I was early and wrong, which, but now we were early and right. But here's a question for you. Do you play it through ETFs, or are there particular areas, sectors that you're really focusing on, individual standout names in the small cap space to add some even more alpha?
So for our clients, we're just using the ETF. We think we can get enough alpha for what their needs are, and what our clients can have a tendency to be a little bit more conservative. But there are definitely, to generate a lot more alpha, going after some individual names would certainly be a route you can go. It's just not what we use. We're sticking with the ETFs for that.
How big do you think the potential impact is from deregulation, the big beautiful bill, and the other initiatives coming from the administration? I mean, you mentioned you don't think it's really priced in yet, but like, where do you see that carrying the small caps from here, based upon what happens throughout the rest of the year?
One of the biggest things is they're so economically sensitive. The financial deregulation and expanding loan growth by financials, I think, is going to be a huge tailwind for these small caps. So, we look at small caps as potentially being able to generate over 20% return for clients, and that's probably conservative. But that was our capital markets assumption going into this year. Now, if we get a momentum trade, that could certainly take it much higher. So we think at a minimum, it's going to more than double the S&P when we look at 2026, as long as we're right on this economy. So again, I don't think it's close to priced into where it's going. And this could be a multi-year trade.
Yeah, I'd love to hear that, be in position. So question for you: energy, best performing sector in the year, shocking everyone. How did you guys view energy coming into the year? What's your thoughts on it right now, in light of what's going on in Iran and the Middle East and potential choke points in supply?
So energy, I wish I had a stronger conviction on it, because we would have had a bigger position than what we have for clients. We played that in our passive strategies using the ETF. So again, because of the economic growth accelerating, that we were the same reason why we were buying small caps generally is really good for energy, because of demand. So I do think short term, like if I'm trading this thing right now, I probably think we probably get a little bit of a pullback. So I wouldn't have been buying today. But again, I think the trend is going to be your friend and not to fight it. And right now, that is as bullish of a market as you can ask for, well before what happened this past weekend.
Yeah, no, totally agree. So you've made tremendously prescient calls in the market. What is the ideal client that you like to work with? What is your sweet spot as you look and survey the market and say, hey, these are people that would understand what we do philosophically, strategically, and would be a great fit to work together?
Our perfect client is clients that are retired or close to retiring, that are financially independent, that are looking for risk management strategies. It's not trying to hit grand slams, but consistent doubles to continue to grow and protect their wealth. That is our wheelhouse for clients in regards to preserving their capital, generating income they need, but still knowing when to press it and get some good growth when the market says so.
Yeah. No, listen, again, I can't give you enough kudos. I want to pick your brain. One last question before you leave. What's something that is surprising that you could think happens this year in 2026? I'm not talking about a black swan event, but an area of opportunity that you don't think people are paying enough attention to outside of just small caps that could end up being a big winner maybe in the back half of the year.
Housing. I think housing is an area that is extremely hated, and you keep hearing all these things about the problems in real estate. But again, the market is saying otherwise. We got into housing towards the fourth quarter of last year using the ETF. Its performance is even better than small caps, and it's a real contrarian play. I think that could be one of the best performers as we look at the end of this year.
Dude, I will give you that, because I color myself as a contrarian, and I'm not even that contrarian to go into housing right now. I see some fundamental problems, but I don't want to bet against you, man. Eddie, I appreciate you joining the show. Would love to have you back again once housing kicks my butt in the market, and I feel regretful that I didn't listen to you sooner. So please come back, join us again soon.
Thanks for having me.